Good morning, everyone. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Shreyansi Singh. Over the next 1 hour, we'll get you top developments from India and around the world and also tell you about the stocks to keep on your radar today. Well, first things first, let's take a look at the handover that's coming from the US. The S&P 500 had its best winning streak in 20 years, Shreyansi.
That's what we're looking at. That sums it up, right? When you take a look at the broad market index, that advanced nearly 1.5%, 1.5%. It's 9 straight day of gains. Its longest winning run, like you mentioned, coming in since November 2004, managed to recover all of those losses that were incurred since April 2nd, which is when tariffs were announced. The retaliatory tariffs, of course, have been in the spotlight as well. When you take a look at the tech-heavy Nasdaq composite, though, that's the one that gained 1.5% as well, while the Dow, that's the one that you're looking at with a gain of 1.4% thereabouts. Similar levels coming in for even the Dow Jones index. Now, when you take a look at what else is happening in the market, you do have increasing hopes for a US trade deal that we're penciling in at this point with major trading partners that have both sentiment and stocks in recent days as well. Chinese authorities have also said that they're evaluating the possibility of starting trade negotiations with the US. A report by the Wall Street Journal also suggested that Beijing is open to trade talks. So there's a lot happening on that front. There's a little bit of relief coming in as far as tariffs are concerned. And that's been quite the cause of concern when it comes to the US markets. But of course, going forward, all eyes are going to be on the FOMC outcome this week. That is something that we're looking at. And currently, when you take a look at what else is happening in terms of the economic front, you do have the Wall Street looking forward, like I mentioned, towards the Federal Reserve's two-day policy meeting that is set to kick off. Other than that, of course, you do have Fed funds futures trading also pointing to just a 3.2% chance of a rate cut, and that is according to CME Group's Fed Watch tool. So that's the kind of expectation that you have. Traders also will be keeping a very close eye when it comes to commentary coming in from the central bank of Fed Chair Jerome Powell on the outlook for the economy. So that's also something that you're watching out for, because you do have heightened uncertainty at this point in time stemming from the trade war, even though the tensions have eased in the last week and the week gone by. On the earnings front, you do have semiconductor, Tyson Foods, insurance companies as well that are set to report numbers. So those are the three sort of companies that you have as far as reporting numbers are concerned. But the FOMC outcome is the one that we're watching out for, Kanishka.
Well, absolutely. Big gains on the Wall Street. But if you look at crude, that's the one that has seen declines over the weekend. US crude oil futures fell more than 4% on Sunday after OPEC Plus agreed to surge production for a second month. Now, US crude was down more than 4% at $55 a barrel. That is shortly after trading open. Brent, on the other hand, fell 3.9% to nearly $59 per barrel. Now, oil prices have fallen more than 20% this year. Now, these moves come as OPEC Plus has agreed to increase output by another 411,000 barrels per day in June. Now, this decision comes after a month. The OPEC Plus surprised the market by agreeing to surge production in May by the same amount. Now, the June production hike is nearly triple the 140,000 barrels per day that Goldman Sachs had originally forecast. Now, the OPEC Plus is bringing more than 8 lakh barrels per day of additional supply to the market over the course of next 2 months. Now, oil prices in April posted the biggest monthly loss since 2021 as US President Donald Trump's tariffs have raised fears of a recession that will slow down demand at the same time. Now, the OPEC Plus is quickly increasing supply at the same time. Meanwhile, Goldman Sachs is forecasting that the US crude and Brent prices will average around $59 per barrel and $63 per barrel, respectively. Now, gold, on the other hand, it edged higher on Friday after hitting a 2-week low in the previous session. But easing trade tensions and a strong jobs report kept prices on track for the second consecutive weekly loss. Now, spot gold was up 0.5% at $3,285 an ounce after hitting its lowest since April 14th on Thursday. Now, prices were down 2% for the week after hitting the record of $3,500 on April 22nd. The gold prices briefly pared gains earlier in the session after data showed non-farm payrolls increased by 177,000 jobs in the US last month after rising by a downwardly revised 185,000 in March. Now, this move also comes at a time when China's Commerce Ministry has said that US has repeatedly expressed its willingness to negotiate on tariffs and that Beijing's door is open for talks.
Absolutely, Kanishka, I wanted to bring the spotlight back to something that you mentioned in terms of oil prices having fallen more than 20% this year. What you have in the spotlight is the entire issue with the supply glut, and so let's keep it with oil. Saudi-led OPEC Plus agreed to increase output by another 411,000 barrels per day in June. The decision, in fact, comes a month after OPEC Plus surprised the market by agreeing to surge production in May by the same amount. And as a reaction, you do have global benchmark Brent, like you mentioned, that fell nearly 4%. Remember, oil prices, like I mentioned, have fallen more than 20% this year. So that's the kind of quantum of losses that you're looking at thus far this year. The June production hike is nearly triple the 140,000 barrels per day that Goldman Sachs had originally forecast. So definitely more than expected, larger than expected output hike coming in as far as oil is concerned, and OPEC Plus is bringing more than 800,000 barrels per day of additional supply to the market over the course of 2 months. We do have that's the sort of update that we have as far as OPEC is concerned.
Absolutely. Now let's move on and let's take a look at the global cues that we're penciling in at this point. Now in terms of US, the ISM services data is expected later in the day. Now also remember China, UK, Japan and South Korea as well as Hong Kong are the markets that are closed for public holiday today. Now back home in terms of Q4 earnings, Mahindra & Mahindra is expected to report its results later in the day.
That's something that we're looking at as far as the events to watch out for are concerned. But tell you what, there's a lot of headlines that you should be looking at bright and early this morning. In fact, it's the end of an era at Omaha. Warren Buffett announces that he will step down from the post of Berkshire CEO, passing the baton then to Craig Abel. Towards the end of this year, a largely expected announcement as Abel was designated as the CEO successor. Back in 2021, the Oracle of Omaha said that he will still hang around to help, but final word on the company operations and capital deployment would be with Abel, who's currently the vice chairman of non-insurance operations for Berkshire. In fact, he owns more than $160 billion in Berkshire as its largest shareholder, said that he wouldn't sell a single share of the stock after he transitions to this new phase. After the announcement, of course, that apparently Abel didn't even know was coming. The meeting ended with a standing ovation for Buffett. Abel also said that he wants to be more active in the way that he managed subsidiaries. What's left to see now is whether the successor manages to carry forward his vision, star power build that was over the last 60 years. So that's the kind of change of guard that you have as far as Berkshire Hathaway is concerned.
Absolutely big announcement coming from Berkshire Hathaway. Now moving on, US President Donald Trump has taken credit for the good parts of the economy but says that the bad parts are former President Joe Biden's economy. Trump defended his tariffs even amid the economic uncertainty stemming from the sweeping announcement. It's not the first time that Trump has tried to shift blame to his predecessor. Just last week, he put the onus on Biden for the US economy contracting in the first quarter of the year. Trump also doubled down on comments he made during a cabinet meeting earlier in the week when he dismissed concerns that his tariffs would lead to supply shortages.
Moving on, US President Donald Trump said that he ordered officials to impose a 100% tariff on films produced overseas, further escalating his trade war. In a post on Truth Social, Trump said that the movie industry in the US is dying a very fast death. It was not immediately clear how such a tariff would work. His move comes nearly a month after China said that it would moderately reduce the number of US films that it imported into the country amid a standoff between the world's two largest economies.
All right, then moving on, a K-pop group, EPX, is all set to perform in Fuzhou, China on May 31st. Now, this comes after 9 years of hiatus. Now, China looks set to make a U-turn on an unlikely sector, that is K-pop, amid a time when it is locked in a trade war with the United States and is struggling with a weak domestic consumption while placing temporary limits on certain Western content, including Hollywood films. Meanwhile, the large-scale annual Dream concert, South Korea's longest-running K-pop event, has reportedly been scheduled to take place in September in China.
Absolutely, there's a lot of headlines to track, but tell you what, let's shift the focus right back to oil, because we've been talking about oil prices that have fallen over 20% thus far this year. We do have Ashesha who's joining in to explain the situation when it comes to the supply glut to us.
Absolutely, Brent crude has fallen below that $60 per barrel mark. It was down over 8.5% last week. It is down 3.5% today, and on a year-to-date basis, it is now down 20%. The latest trigger, of course, is the output hike, which has come in from OPEC Plus countries over the weekend. Not in line with what the street was expecting. This is much unanticipated. The reason we are seeing that kind of move in the oil market. Several announcements that came in over the weekend, where the OPEC Plus said that they will be increasing production by 411,000 barrels per day beginning June 2025. Remember, this is a part of their plan to hike production as a part of the cuts that were announced earlier, but this has come in faster than what the street was working with, and that's the kind of reaction that we are seeing in the oil market today. In fact, several OPEC Plus countries, Saudi Arabia, Russia, Iraq, UAE, Kuwait, met virtually on the 3rd of May, and they've now decided to hike production by June this year. In fact, Economic Times has also reported, citing sources, that output could be increased further in the month of October this year as well. So quite an unexpected move that has come in from OPEC Plus, although they have said that market fundamentals continue to remain very strong, demand continues to remain intact, inventory is at lower levels. In fact, they've also said that they will support stability and accelerate compensation for prior overproduction, and adjustments may be paused or reversed depending on market conditions. So several moves that came in, then commentaries that came in over the weekend, but for now they have increased production by 411,000 barrels per day with effect from June 2025, much unanticipated, and that is the reason Brent crude has now fallen below that $60 per barrel mark.
Well, thank you, Ashesha, for that lowdown of all that's happening in the oil space. But with that, it's time to take a very short breather on this edition of Market Cafe. We'll be right back. Stay tuned.
And those are some of the headlines that we're looking at bright and early this morning. But tell you what, let's get a quick check going as far as the Asian markets are concerned. And it's only one market in question. There you have it on your screens as well. Downtick of 5% coming in. As far as ASX 200 is concerned, you did have that index reversing course from strong gains that we saw in the last session. I'm talking about its highest level since February 27th being hit as far as ASX 200 is concerned. Other than that, Japanese, South Korean, Hong Kong and Chinese markets are shuttered for public holidays. So that's largely the roundup that you have, just the one market to look at as far as Asia is concerned. Nifty, of course, on Friday shut shop around 24,300 levels thereabout. But what you're penciling in at this point is a gap up open, a start above 24,500 is what we're penciling in at this point in time. So let's really see how that pans out for us. But with that, it's time for a very quick break on the show.
Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar, and Shreyansi Singh. Well, let's get you the latest with regards to developments in Kashmir. Now, in a significant escalation of tensions following the Pahalgam terror attack, India has announced a complete ban on imports from Pakistan. Now, as per the Commerce Ministry notification, the provision was imposed in the interest of national security and public policy. The move comes after April 22nd attack in Kashmir's Baisaran Valley, which resulted in the death of 26 civilians. Meanwhile, India also banned Pakistani ships' visit to any Indian port. Now, the order is issued to ensure safety of Indian assets, cargo and the connected infrastructure. And the situation remains highly volatile, with both countries on high alert. My colleague Sumita Kari joins in with all the details.
Yes, in continuation with a raft of diplomatic measures that India had taken in the aftermath of the Pahalgam terrorist attack, now the Commerce Ministry has issued a notification which suggests that all imports from Pakistan, direct or indirect, they have been banned. In fact, the government has said that this action has been taken, this decision has been taken, keeping India's security in mind. It also says that any exception to this prohibition will have to have separate government orders or separate government provision. And the impact, the order or this notification will go into effect almost immediately is what the notification actually suggests. Now let's understand how much of an impact is India going to face, or Pakistan going to face. Well, according to the data that's been shared by FIEO, that is the Federation of Indian Exporters, India's exports to Pakistan between April 2024 and January 2025, they were to the tune of $445 million, while imports from Pakistan were very minuscule in the same time period. So they were to the tune of $0.42 million. So definitely FIEO says that this is going to impact Pakistan, which is going to have to strike deals, direct or indirect deals, in terms of fulfilling those requirements, because India has, of course, come out with this latest notification. Like I said, the situation between the two countries is quite dire. Pakistan has violated ceasefire in Jammu and Kashmir. The situation has been tense along the LOC and, of course, the international border as well. Several countries have come out in support of India. At least premiers of 17 nationals have called the Prime Minister, expressing solidarity and condemnation for this horrific and horrendous terrorist attack. In fact, a couple of days back, in the first set of moves that India had taken, India had actually banned all SAARC visas for Pakistani nationals. It had also reduced the diplomatic strength of Pakistan High Commission. Alongside that, the integrated check post at Atari was decided to be closed, and of course suspension of the Indus Water Treaty, that also came about. Remember, it's an important water sharing pact, and that came about as well. And after that, Pakistan also threatened to pull out of the Simla agreement as well. So tensions have only been escalating on both sides. We'll have to sort of assess the larger impact, the broader impact on Pakistan and especially the country's economy that this notification is going to have in a short bit from now.
Absolutely. Thanks, Samita, for giving us that update. As the trade ties continue to sour between India and Pakistan, we also caught up with Ajay Sahai, DG and CEO, Federation of Indian Export Organizations. Let's go across and listen in to what he had to say.
Both sides are taking measures and countermeasures in wake of the Pahalgam attack. And if you look into India's trade with Pakistan, it was just minuscule. In the first 10 months of the last financial year, our export of around $445 million and import from that was just $0.2 million. When I look into in the context of roughly close to $900 billion of India's overall international trade, it is not even 0.5%. So completely insignificant. It will not have any impact. Even some of the products which we are exporting to Pakistan is a sizable number, that means $100 million plus, are chemicals and pharma. And we know that India's overall exports of these products is close to around 25 billion and 17 billion. We have a vibrant domestic market also. So on the export side, absolutely no impact. Import is so minuscule that we should not talk about it also.
All right, and that's the take coming in as far as the import ban then is concerned. Of course, you do have a lot of important headlines when it comes to India shutting trade ties with Pakistan, because you do have that banning of imports decision, of course, taken in the interest of national security, and we've just played out some commentary coming in as far as this particular ban is concerned. Exception to prohibition is going to be requiring government approval as well. So that's largely what you're looking at as well. But tell you what, Finance Minister Nirmala Sitharaman is in Milan for a 4-day visit where she's set to attend the ADB's annual meet, hold talks with global financial heads as well, including the finance ministers of Italy, Japan and Bhutan. Prakash, tell us what's on the agenda.
Yeah, that's a very crucial meeting. However, it's an annual meeting of Asian Development Bank with the finance minister. Will engage with other counterparts as well. But it's a crucial development at this point of time, especially amid India's call to review loans to Pakistan, especially in the wake of a Pahalgam terror attack. As for the deal shared by the Ministry of Finance, the Finance Minister is leading a delegation from the Department of Economic Affairs. She'll be there in Milan from today to 7th May. Along with that, if you look at the engagements, bilateral engagements, she'll have meeting with the with the finance minister of Italy, Japan, and Bhutan, along with the ADB governors. One important session where the finance minister will be participating on cross-border collaboration for future resilience. So these are the important developments, but this is a very crucial meeting at this point of time. Sources are indicating that the government has already initiated the process. In fact, it is approaching World Bank, international organization like IMF, where its representative will raise its concern and request the international financial institutions, all the multilateral development banks to review the loans granted to Pakistan. So it's a very significant development coming in, and we are expecting some big development, especially the government. It's a part of the government's all-out effort to grill Pakistan on international forum, especially in the wake of Pahalgam terror attack. Back to you.
Thank you, Prakash. Now, moving on, let's get you some updates from the earnings space. Now, SBI has reported a good set of numbers for the fourth quarter. Now, despite a 10% fall due to higher provisions, quarterly profit managed to beat analyst expectations. Meanwhile, Kotak Bank, on the other hand, reported an inline set of numbers. Let's go across to Varun for the fine print of those numbers.
Banks have shown good results. Let me start with SBI, wherein the overall profitability has been very good. The profit has come at around 18,643 crores, which is almost better than what we were expecting, although there is a decline of around 9%. Also, the NII has gone up by around 2.69%, and the PPOP that has gone up by around 8.83%. The overall advances growth, if you see that has shown a growth of around 12.4%, and this has been supported by Agri and SME segment. The deposits, they have shown a good growth of around 9.5%, and also the asset quality has shown good improvement. The GNPA that has declined by around 25 basis point on a quarter-on-quarter basis, and also the net NPA have declined by around 6 basis point. The overall NIMs for the whole book stands at around 3%, on a full year basis. Also, if you look at the brokerage notes, Motilal Oswal, no doubt they have cut their estimates by around 4.6 to 5% due to higher provisioning and also NIM pressure. But yes, they have a buy call, they are maintaining it, and they have a price target of 915. Also, Nuvama, they say after 2 quarters of fall, this time the net interest margin has been stable. So this is a big positive for the company, and the overall guidance for loan is also good for the company, and hence they have a buy call with a price target of 950. Now let me come to Kotak Mahindra Bank. Overall, if you look at the results, they are in line because the profit has come at around 3,552 crores, and also the NII that has grown by around 5.42%. The advances, they have gone up by around 13.5%, and deposit have gone up by around 11.1%. But the key highlight of the results were the asset quality, because if you look at the credit cost, that has declined from 0.68% to 0.64%, and gross NPA has shown good improvement by around 8 basis point, and the net NPA, they have shown overall improvement by 10 basis point, and the fresh slippages, if you look at them, they have declined by around 10%. So overall asset quality for the bank has been good. Kotak, Motilal Oswal has a buy call on the stock with a price target of 2,500, wherein they estimate this bank to deliver ROA and ROE to the tune of 2.1% and 13.3%, although they have trimmed their overall estimate. And Nuvama also have a hold call on the stock, but they have increased their price target from 2,040 to 2,350 rupees now.
Well, absolutely. Thanks, Varun, for getting us that update. Tell you what, let's also go across and listen into what Aditya Shah then had to say about the growth rate as well as asset quality of SBI then.
So the growth rate, if you look at it, is at about 12%. The corporate loan growth is at about 9%. The retail loan growth is at about 11%. I believe SBI should grow nearby to this 11-12%. That's how the system growth is, and SBI should nearly about mirror that growth. As we come on asset quality for top banks has continued to remain strong. Similarly for SBI, it will continue to remain very strong. The slippage ratio has come about at about 0.42%, which is similar to what it was the last year. So asset quality is not a problem for SBI. It will continue to remain strong. As smaller banks continue to struggle, the larger banks will continue to win.
Yeah, the combination of factors, of course, there is definitely a base effect. Q4 FY24 was an outstanding quarter for us. We had some provisions, write backs and other things. But I think broadly there is a general compression of the margins also, which also is getting reflected in our NII. If you see, I think almost NII growth is could have been better, and that is also a reflective of the whole of last year. The cost of deposits was higher, while we moderated in the last quarter. If you see, our cost of deposits have not significantly gone up, but on the year-on-year basis, the cost of deposits movement also has impacted the profits.
You mentioned about provisions, which has also gone up significantly. What has been reason for the same?
No, broadly, I think the additional provisioning requirement in the Q4 as was an account of aging provision. As you know, the assets become substandard to doubtful, doubtful to D1, D2, D3, increasing the provision requirement. So out of 9,000 crores additional provision we made, around 5,600 plus is an account of aging provision only. So there's nothing unusual movement in the provisions.
You also mentioned about the loan growth part this year. You are saying that there is going to be slight moderation. What is the reason for that? And again, are you little conservative in your guidance?
I think we are looking at what is happening on various segments, and also the consumption pattern has to emerge, and we are in fact the last numbers on the consumption indicate that the consumption will come back, and movement is there both on the rural and semi-urban areas. It is also based on the fact that if we have 10% nominal GDP, the credit growth generally tends to be 2 to 3% more than the nominal GDP. Based on that, we are placing around that. And in the previous years, the 20% growth rate what we have witnessed earlier was also a pent-up demand, and many things which have contributed to that base effect. This also will have some base effect as well as a combination of while we keep talking about the tariff-related uncertainty, I think that global uncertainty also sometimes, new investment probably will be taking some time to decide on.
So, is there any particular reason why corporate loan growth has come down compared to what you were aspiring for? I think the guidance was around 12%. In this quarter, it is around 9%. So, what has been reason for that, and how do you see corporate loan growth picking up in this fiscal year?
Mid-corporate has done well. We have done about 15% to 16% growth rate there. But based on the pipeline what we have, about 1.7 lakh crores on the sanctions but yet to be disbursed, 1.57 lakhs on the pipeline, we have a good visibility on the corporate side.
Right. One last question before I let you go. One particular order has come from Supreme Court regarding Bhushan Steel. Now, this is not a question about particular entity, but the whole banking sector came as a surprise to everyone. Have you already prepared for that? Have you also done some kind of mathematics? What will be an impact? Because there will be some money which could have come to SBI and you may have to return later.
The law firms which are advising the lenders as well as the company are working, reviewing the order, and whatever the steps are required to be taken will be taken.
Thank you so much for talking to us.
Thank you.
All right, that's the word coming in from SBI's management as far as their FY26 guidance is concerned. But other than that, Kotak Bank's profit for the fourth quarter dropped by about 14% to 3,551 crore rupees, while the net interest income rose by over 5% compared to the last year. Now, asset quality also turned out to be one of the strongest factor for the bank this quarter. Here's an excerpt of an exclusive interaction with Kotak Bank's management.
I think the fundamental issue really has been around the microfinance business. That is the business which has, over the years, delivered very good results for us. In this particular 2 quarters, quarter 3 and quarter 4, it's obviously been very difficult. As you know, that this is an industry-wide issue, and the losses have obviously kind of overwhelmed the kind of results. But ex-microfinance, we've grown really, really well. And the good news is during the quarter, we got out of the technology embargo, so that lets us go. and then we've got exciting plans as we go ahead.
You have maintained that you plan to grow 1.5 to 2 times of nominal GDP growth. If you talk about the loan growth, going ahead in this financial year, will you continue with that plan? That means the growth which is there this year, can we see slightly better, or there will be some pressure?
So, see, Ankur, this is more of a risk appetite statement. If you are growing very aggressively beyond, call it 2.5 times normal GDP growth, you're obviously taking additional risk. I've always told you, I'm here not for a day in the sun or a quarter in the sun. My goal is to build a sustainable franchise which our customers are very proud of. That requires me to do it with prudence and not take any shortcuts. So what we are saying is, from a prudent statement and not taking on too much risk, we believe 1.5 to 2 times nominal GDP growth is a good thing. Now, there may be certain circumstances, like we come across a particular acquisition, or there's some areas which we have never done before, which we want to go into, which will grow. But the guiding principle is 1.5 to 2 times. Exceptional circumstances may apply.
Talking on margins front, surprisingly, you have improved while other banks are struggling. I want to understand, do you want to come closer to 5% mark, or do you think this is sustainable considering the environment where the rate trajectory looks on a downward side?
So depending on how much the rate cut is, when it is, how it kind of happens, what the market reaction is, how much we are able to pass through, we would like to try and say that, we keep in the ballpark, maybe slightly lower if there are too many rate cuts, but, try and manage the business through that kind of cycle.
One last question before I let you go. Looking at the wicket, microfinance side, you said there are challenges, but if you look at RBI embargo, now that is behind you. How do you explain your situation in growth front? Do you think it will be better pitch to bat on now?
Our business is clearly not on autopilot, and we've got to guide the business. The most important thing is that we've got a North Star. We will continuously plow towards that North Star. Yes, there will be things that will come along which we'll have to kind of deal with. We'll deal with it, but the North Star is defined, and we'll keep at it.
Welcome back. You're watching Market Cafe on ET Now, and it's time now to get you the list of stocks that you should be keeping on your radar bright and early this morning. In fact, Varun is standing by with just that list.
So let me start with some of the companies, some of the mid-cap companies who have come out with the results. Marico is one of them. The overall results look decent because the volume growth has been 7%, which is good. For FY25, the volume growth has been around 5%. The revenue growth for Q4 has been around 20%, 2,730 crores. The net profit growth has been around 8%, and the EBITDA margins, they have declined by around 263 basis points to 16.8% now. CDSL, the overall results looks weak because on a YOY basis, the revenues are down by around 6.8%, the profit is down by around 22.5%. For Indian banks, it's a decent set of number because the interest income is up by around 8.4%, the profit is up by around 6.2%. If you look at the provisioning, they are down by around 25% on a quarter-on-quarter basis, and there is improvement in asset quality. Also, the company has approved fundraising of around 5,000 crores. Now, City Union Bank, the results look decent because the interest income has gone up by around 11.5%, and the NII has gone up by around 9.8%. The profit is up by around 13% to 288 crores, and the NPAs have shown improvement, especially the gross NPA from 3.36%, it has come down to around 3.09%. Now, some of the corporate announcements, keep an eye on AU Small Finance Bank because today there are some of the investors like Silver Oak, True North, they are going to sell around 1.24% of the equity. The total deal size is 600 crores and the floor price is 650 crores, 650 rupees per share. That is around 3 to 4% discount from the previous close. Also keep an eye on Bharti Airtel and also Tata Group because the mutually agreed, the agreement that the two companies have done for the Tata Group's direct to home business, that they have terminated by a mutual agreement. Oberoi Realty, the company has done 970 crores of booking with the launch of Elysium Tower D at Oberoi Garden City, Goregaon, Mumbai. Keep an eye on Swiggy because the company has scaled up its food delivery service Bolt, and now it is operational in more than 500 cities nationwide. Moil, the company has given April month update, and the performance for April has been best ever in the month of April, wherein the company has recorded production which is up by around 1.5%. And also keep an eye on Shilpa Medicare because Shilpa Medicare's biologic arm, Shilpa Biologics. They have a site at Karnataka, and it has received actually an European GMP certification for manufacturing of test batches, and this is based on the inspection which was done between 18 Feb to 20 Feb.
Thank you, Varun, for getting us that list of stocks to keep on our radar today. But with that, let's shift focus to the earnings space again. Now, a mixed fourth quarter show for Avenue Supermarts. The company added about 28 stores in the quarter gone by, with the management flagging rising competition concerns in the FMCG segment. Snehi gets us all the numbers and a breakdown of what the results mean.
Well, yes, if you talk about DMart's quarter for FY25 numbers, other than the revenue that's in line with our estimates, you have the PAT, EBITDA and EBITDA margin that have missed our estimates. On the standalone year-on-year basis, here's what the earning fine print looks like. Revenue has come in at 14,462 crores, up 16.7% year-on-year. EBITDA has come in at 981 crores, which is an uptick of 3.9% year-on-year. We were expecting this number at 1,052 crores, so a miss. Net profit has come in at 620 crores, a 2.6% uptick on a year-on-year basis. We were expecting a 658 crore figure here, so a miss once again. And the EBITDA margin has come in at 6.8% versus 7.6%, which is down 84 bips on a year-on-year basis. Now, we were expecting a decline, but not to this extent. We were expecting this number to be at 7.3. It's come in at 6.8, so again a miss versus our estimates. In terms of store count, they added 28 stores in quarter 4, now bringing their total store count to 418. Mr. Neville Narona, the CEO and Managing Director at present, said that 2 years and older DMart stores have grown by 8.1% versus 10.3% on a year-on-year. So there's a dip on the same store sales growth basis as well, but in line with the high single-digit number that we were expecting. Increased competitive intensity in FMCG space has impacted their gross margins, is what he has said. Overall business continues to be resilient in metro towns, but it is much better in non-metro. Overall gross margins in the matured metro towns will remain soft for a certain amount of time. That's the commentary coming in from the management. And Anshul Asawa, the CEO designate, has joined mid-March and will take over in the next 4 to 5 months. On DMart Ready, which is their e-commerce arm, they've said that they're growing extremely well in metros. They've also shut down several pickup points, and home delivery channel is growing strongly and making up from the losses of the shutting down of the pickup points. Lastly, most importantly, they've said that profitability for the standalone online segment could be some time away. So there's some bearishness on the margin expansion as well as profitability for DMart Ready, and overall it's a weak set of numbers coming in from DMart for quarter 4.
Alright, then weak set of numbers coming in as far as DMart is concerned. But moving on, then let's keep it going with earnings. Auto major M&M is all set to post its Q4 earnings as well. Let's go across to Srishti, standing by with an update on what the street is penciling in.
Before we tell you the numbers expected from M&M, let's tell you what the volume growth was in the quarter gone by. If we see the automotive volumes, then there has been an uptick on a YOY as well as on a sequential basis, where this is the tractor volume that has seen a decline of 28% on a sequential basis on the back of seasonality kicking in, but there has been a double-digit growth on a YOY basis. But when we look at the internals, yes, of course, the autos have been doing well, but in terms of the discounts, there was some bit of an elevated discounts for the XUV700. Along with that, the EV has started contributing, which of course is not that meaningful and impactful when it comes to the margin performance in a positive fashion, and because of that there is a likely compression that is expected in the auto EBIT margins. But when it comes to the tractor, the margins are expected to be steady for this quarter when it comes to M&M. Let's tell you what is the number expected on the consolidated front. Firstly, from the revenue front, we are expecting a number of 30,095 crores, EBITDA expected at 4,218 crores, but the margins will be the key to watch out for. On a consolidated basis, we are expecting 14% to be clocked in for M&M, though of course it will be a jump on a YY basis, but sequentially there could be a marginal drag. So let's watch out for that particular number. And lastly, on the profit figure, 2,316 crores is what we are expecting. But apart from the numbers, all eyes will be on the management commentary, how they see the SUV demand shaping up, the kind of EV contribution in the times ahead, and well, of course, with the global uncertainty around tariff, how is M&M shaping up and planning their global strategy in the due course of time. So all eyes on M&M. Back to you.
Thank you, Srishti, for getting us what the street is expecting when it comes to M&M's Q4 numbers. But with that, it's a wrap on this edition of Market Cafe. Thank you for watching, but stay tuned to ET Now as the market takes all the action forward.
If you like this video, then like, share and subscribe to ET Now.